Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Black people, listen. We're going to be reviewing Disney. I always want to review this to see what it's actually like and see what's under the hood with Disney. So right now they're at a 97.31 share price, which is interesting, but we're going to look a little bit more deeper. So we want to make sure, does this company pay dividends? Because we like to put something in and make sure we get something out of it. So let's take a look. So Disney does pay dividends. They pay a share of it annually, so they pay every year, or two semi-annually payments too, which is 75 cents to $1 share. So we see here, we go over to their dividends here. They have a growth of 55, so they actually start paying back dividends again because they used to pay them, but they stopped for a while. So right now they was at 30, 45, so they took a growth pretty quick, which is weird. So I was setting on them stopping, but it's semi-annual payment, which is weird. So they pay within they pay 2 payments a year, if not. So decent, I guess, I would say. So let's look at the charts here. We always look at the 6 months a year. So it actually took a little hit at the beginning and another hit. Then if you want to say an uptick in the volume of 23, then they took a little downward spiral again, took another hit too as well. So Disney been going through it, I see, for the year. They're still in the red too, still a big hit for 44 million, 38 million. So what's keeping them alive pretty much is the service itself. 5 years. Ooh, God, they went from 180 all the way down to like 83 is their lowest. Oof. Go to the max and they're still in the green. So overall, their uptick was like 170. So imagine owning this at $4.50 in 1987. Crazy work. So they're in the red within 5 years. The employees they have is 194K employees for them. So interesting. So we're going to go under the hood and see what they have here. So we're going to go to financial and cash flow too as well. So their net income is 2.25 billion, but they actually took a hit for cash operation, which is running at 6.91 billion. So they're running this company at a negative. So it takes them 6.91 billion to run Disney. I don't know how that works. That is pretty crazy as you think about it. They was in the negative for the inventory, so they back in the positive, which is 25 million. Yeah, they ran in a negative. Cash from investing, they're at negative 2.7 billion. Makes sense because they ran in a negative. I could see that too as well. I haven't got no prepaid cash from investing. They still at negative 0.72 billion. So they're putting liens on their own investments too as well. That's not good. Financing 4.15 billion. So they're running at a negative here. Cash flow, they got 2.98 billion, but their unleveraged cash is 3.32. So they're paying their employees and their net income is running, if not lower, in the millions, if not lower. So, but yeah, we're going to look at the spreadsheet and see what that actually gives us, the nuts and the bolts, basically. The inventory is 3.25 billion. Decent, but not good at all because you run in a negative there too as well. Total current assets, which is 2460. Disney is the asset. It makes sense. Long-term investments, 8.40 billion. The company is worth that. Accrued expenses, 3.59 billion. So they don't want to tell us the rest. But the long-term asset is 43.22 billion. Makes sense. Same thing with the total assets, 205 billion. This Disney. So long-term debt is 38.47 billion. So they took a slash of that. That's why Disney is running at a negative right now. Pretty much, yeah. That's not good. I hate to say it, that's really, really not good. We go to the earnings here too as well, which Disney does make amount of money. The revenue is good, but they slashing the net income and running at a negative. So this doesn't even matter. This is what they make in a total every year. Just like I said, anything that looks the same number within 2 to 3 year span, they're running at a negative. So we actually seeing Disney run at a negative right now. They cost too much to be sustainable within 5 years. So you see what I'm saying here. This makes sense of why this chart makes sense as well. I would say, but let's go to the bullish and the bearish, like I always say, for Disney. The bullish, Disney is direct to consumer. Yeah, they are. The segment achieved the turnaround, swinging from a $4 billion operation and loss of $1.3 billion in operating. I told you they playing the employees, boy. They taking a hit, boy. They taking a hit, a very big hit to run Disney in general. To run Disney is $1 billion. How to run a company cost you $1 billion? Operational income, physical and benchmark analysis might see their streaming business. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. As a core long-term growth and ending unpinning by buy rates of 115 price. They're not reaching that because Disney is messing up all the comics. You see how Supergirl was, and I didn't even see it. I knew it was bad because it wasn't a comic. So they actually ruining their own streaming business, and I pay for it. I ain't gonna lie to you. I got Hulu, Disney, and everything else basically, and HBO Max. So they're running at a loss, like not just a loss, they're running at a negative in general, which probably bearish is going to explain this. Well, Fargo argued Disney should abandon direct consumer and streaming entirely to return the license to content and third-party platforms. The estimate to pivot could generate $15 billion annual license revenue with fiscal year and adding roughly 10% earnings per share, 40% of stock. So they direct consumer is keeping them afloat. So I wouldn't even abandon that because they need that to fund the streaming, because they have to pay for licenses to use their product, which is movies, TV shows, stuff like that. So they need direct consumer to run, but they're running at a loss with that because they have to physically run the operation for Disney. They can't afford to run Disney. I don't know how else to explain it. Disney is really, Disney is broke. I hate to say that, but you were like, oh, it's $1 billion company, but it's really not. They're running it nothing. If you look at it that way, I guess. I don't know. This is going to be kind of a short video. The consensus say Walt Disney is currently a strong buy. True. 19 analysts here. They 89% buy, 2% wholesale. Makes sense, but long term, no. The share price right now, what I do is I take the money of the share price and times it by the shares that we would buy it for to see how much everything would cost with the amount of shares that you buy. So you take the share price and you times how many shares that you do. So I always do 10, 50, and 100. I pretty much give you the straight thorough amount that you have to run this company. So 97.61 times 10, it will cost you $976.10. Decent, but you don't know these dips, right? So right now we're gonna look at it as 97.57 times 50. It's gonna cost you $4,878.50. That's with 50 shares. 97.57 times 100 shares will cost you $9,757. Walt Disney is a risky company to invest in. For one, they're running at a negative. For two, they have no profitability at all. They're literally hanging on by a thread, and they're trying to make streaming their main end course, but they need direct consumer to run the streaming. If not, how would they buy the licenses for certain shows and stuff? And I don't have Marvel, so Disney only got so much they can do. If I would suggest something, Disney should bring back like old cartoons and stuff. Just be Disney. Stop trying to outsource what you can do. Be Disney. Give us what we want. And you horrified, like really jacked up Supergirl. So I don't see Disney coming out the hole no time soon. I actually see Disney going down in bankruptcy, really, if they're not already is. So I would not invest into them. ETF probably, index fund probably, weekly if they're available. But I don't see Walt Disney taking a weekly, anybody making a weekly, because they're in a negative. They don't have stable profit to run their own company. Their company costs more to run than it is owning the company. And that's not what you want as a company. So, yeah. But this is all advice. I hope this will definitely help you out to invest the way that you want to. I'm just giving you the numbers. So, I hope you enjoyed the video. I'm going to catch you guys on the next one.